predicting the future and price of Bitcoin by 2050 with artificial intelligence. Bitcoin has seen tremendous growth over the past few years. After hitting an all-time high of $69,000 per coin in late 2021, the price of Bitcoin seemed to stabilize around $50,000 for most of 2022 and 2023. However, towards the end of 2024, the price began climbing again and reached $75,000 by early 2025. Several key developments have fueled this latest surge. More mainstream financial institutions like Fidelity and JP Morgan have begun offering cryptocurrency investment products, giving the asset class greater legitimacy. Countries like El Salvador have adopted Bitcoin as legal tender, increasing real-world usage. Major tech companies like Microsoft and Starbucks now accept Bitcoin payments, and the total number of Bitcoin wallets worldwide has now surpassed 150 million. But perhaps the biggest driver of Bitcoin's price increase has been growing institutional investment. Pension funds, university endowments, hedge funds, and family offices have started allocating 1 to 5% of their portfolios into crypto, treating it as an alternative asset like gold or real estate. One Harvard endowment report revealed a 2.5% Bitcoin allocation. With increased institutional demand, supply has tightened and prices have responded accordingly. Many crypto enthusiasts believe this is just the beginning. As Bitcoin gains mainstream traction and adoption increases, they expect the price will continue rising over the long term and could reach $250,000 per coin by 2030. But risks and volatility remain ever present. Regulations, security issues, competitors like Ethereum, and black swan events could all impact Bitcoin's trajectory. While the future looks bright, it is far from certain. 2030. In 2030, Bitcoin has firmly established itself as a mature asset class and key component of the global financial system. The road has been bumpy at times, but Bitcoin's price has managed to power through thanks to continued adoption and network effects. After topping $100,000 per coin for the first time in 2028, Bitcoin entered a period of consolidation, trading in the $75,000 $125,000 range throughout 2029 and early 2030. The asset class has proven itself resilient, recovering from several black swan events, like an extended power outage in Texas that disrupted mining operations for weeks. Hackers remain an ever-present threat, but security around cryptocurrency has improved dramatically over the past decade. Many Fortune 500 companies now hold Bitcoin on their balance sheets, and most major financial institutions provide crypto services. PayPal processes more Bitcoin transactions than MasterCard, at over $200 billion per year. Bitcoin IRAs and 401ks are commonplace, allowing people to invest through retirement accounts. The Lightning Network has taken Bitcoin micropayments mainstream, powering instant, tiny transactions across the internet. Fledgling central bank digital currencies have also helped validate the digital asset class. Despite this progress, regulatory uncertainty remains. Several governments have attempted to ban Bitcoin outright, while others have imposed strict KIC-AML regulations. A mountain of proposed legislation aims to rein in the crypto Wild West, but industry leaders argue this legal clarity will ultimately help institutional adoption in the long run. With over 350 million users worldwide, and true scarcity capped at 21 million coins, Bitcoin remains the digital gold standard. While risks always persist, the future looks brighter than ever. If current trends continue, Bitcoin could eclipse $500,000 per coin by 2040. 2035. The year is 2035, and Bitcoin has become a mainstream financial asset worldwide. After reaching an all-time high of $432,000 per coin in late 2033, Bitcoin now trades around $350,000, and has established itself as a trusted store of value. What fueled this monumental growth? For one, generational wealth transfers have put Bitcoin in the hands of millions of millennials and Gen Zers. These younger investors used their newfound riches to buy more crypto. Bitcoin ETFs make it easy to gain exposure through retirement accounts that now allow crypto allocations. And financial advisors routinely recommend 1 to 5% Bitcoin portfolio allocations to balance portfolios. Sovereign wealth funds have also poured money into Bitcoin, turning it into an immense market. Norway's $1.4 trillion sovereign wealth fund holds over $30 billion in crypto assets, making it one of the largest institutional investors. Other nations like France, Sweden, and Saudi Arabia have made similar moves. This influx of government investment has been a huge legitimacy boost. Of course, risks remain. Trading often dips during times of high inflation or geopolitical crises before recovering. Harsh Chinese crypto regulations shook the markets in the late 2020s. Critics continue to argue Bitcoin is too volatile to be a proper currency or gold alternative, and quantum computing looms as a potential cryptography threat. But for the most part, Bitcoin has established unprecedented trust and network effects. Lightning Network capacity exceeds $1 trillion, powering micropayments across the internet. Sidechains like Liquid allow faster transactions, and integration with existing banking and tech systems grants seamless access for over 500 million users worldwide. If the current paradigm holds, Bitcoin's steady upward trajectory should continue. 2040. By 2040, Bitcoin has become a mainstream currency touching every part of the global financial system. The digital gold narrative has fully materialized, with Bitcoin emerging as the world's dominant value store. Prices hover around $850,000 per coin, up tenfold from just 5 years ago. Several factors catalyzed this immense growth. Hyperinflation crippled dozens of fiat currencies, and record low interest rates left investors hungry for savings vehicles outside government control. Developing countries rapidly gravitated towards Bitcoin to escape currency debasement, and concerns over hacking subsided thanks to quantum-resistant encryption and highly regulated, insured custodial services. But Bitcoin has also become far more than just a store of value. Major tech platforms now operate on top of the Bitcoin blockchain. Sidechains like Rootstock process millions of smart contracts and cross-chain atomic swaps each day, while still harnessing Bitcoin's security model. Entire decentralized finance (DeFi) ecosystems flourish on Bitcoin sidechains, with decentralized exchanges, lending markets, derivatives, NFTs, and more. As trust in centralized institutions declined, Bitcoin DeFi became the backbone of digital finance. Of course, risks still loom. Critics argue Bitcoin lacks the transaction throughput needed for mainstream global adoption. Rival blockchains boast faster speeds and more programmability, and heavy-handed government regulations could harm Bitcoin's pseudonymous nature and philosophy of self-custody. But despite its flaws, Bitcoin remains the digital gold standard and monetary base layer of the internet age. With over 1 billion users worldwide and full integration across the financial landscape, Bitcoin's future is brighter than ever. The next big milestone, a $1 million coin, no longer seems unfathomable. Perhaps just another 5 years away. Subscribe.